Okay, everyone, and welcome to another quick tech video. Today we are looking at another blue chip on the ASX. This time it's Westpac Banking Corp. So it's a bank. A bank borrow money to you to get interest back, but it does a few things. So as a quick tech, we can't really break down like what kind of lending it does and what proportion of lending and kind of customers and target customers and stuff like that. But it does the various consumer lending, business, institutional lending, wealth management, and all of that. So very typical bank stuff. And yeah, it's in the ASX blue chips list, so that's why we're going through it. So without further ado, let's jump straight into the ratios. While we're doing that, let's set up WBC on here. Always, not AWS. I'm talking about ASX. Cool. And we just want to see some other data there. Okay, PE ratio 33, not bad. And going straight down to quick ratio, we got nothing. Dividend yield 1.46%. So this is not as good in terms of dividend yield as ANZ and Commonwealth Bank. I remember Commonwealth Bank was 3 point something percent, while ANZ I think it's a little bit higher. I have bought it uh, and when I bought it, it's supposed to be 10% dividend yield, but because of the pandemic, they kind of hold off on the paying out dividend thing. So that's a little bit disappointing. But anyways, it's my shares got up for of ANZ has gone up by 44%. So that's always a good thing. All right, let's have a look at that. Yeah, 1.46%, 100% franking. So, if I was going to base on dividend alone, I would invest in Commonwealth Bank instead. Anyways, let's move on to cash flow. While it's loading, let's see what else we can extract from here. Yeah. So yeah, it's one of the big banks in Australia. So it's one of big four, and then again, banks in Australia are guaranteed by the government. So it's huge, $77 billion. But I think it's a little bit smaller than Commonwealth Bank. I can't remember from the top of my head. It's cash flow. Let's have a look at it. Wow, $58 billion. Wow, that's huge. Some changes in working capitals. Okay, cash receipts. So I don't. Okay. It's always a good sign to see operating activities go up like that. Investing. Okay, so it's investing. I wonder what is investing in. So again, it's quick tech can't really go into much more, but from the way that I kind of analyze these is that if I see investing, in negative, I kind of like, that's good because basically, it's investing in other things and reaping the benefits in the future. Financing, paying back debt, again, that's a good thing. I explained this in the Commonwealth Bank quick take is like, what kind of debt is the bank paying off? Well, debt to other banks, but more like reserve banks and other entities that let borrow cash. Net change in cash is $10 billion. So, that's a good thing. And what I wonder is why is this negative? So that, again, that's there will be not more time needed to investigate all those little questions. It's looking okay so far. Let's see, have a look at the balance sheet. Balance sheet's gone up. So cash, earning assets. Let's see, loans. Okay. Goodwill stays pretty much similar. It's actually gone down. All the banks having trouble. All Australian banks having a tough time this year, actually, with so many inquiries into it and stuff like that. And not only that, because of the pandemic, they kind of, even though they're saying they willingly do it, they kind of have to defer mortgage repayments and stuff like that. So, anyways, current liabilities, no current liabilities. That's interesting. And you got all of these total liability. That's probably why there was no quick ratio. But it's again because investing.com sometimes like missing out information here and there. What I would do is find, if you got a if you have a brokerage platform, if you use a brokerage platform, usually they have information themselves, and you probably double check these things. But yeah, moving on to income statements, and after that, we'll jump straight over to Trading View and have a look at the chart and see where we are. At the moment, I kind of like, hey, it's okay. Um, it's probably, if I was going to invest my money in another bank, it would be Commonwealth Bank, and not this one. Here you go. I already got shares in ANZ. I haven't got in Commonwealth Bank. So and you can see the CVA is so much bigger, and it has a more favorable P ratios also, and it's actually have 1 year change. Look at that. The price change is actually in the positive. There's a zero. So WBC is not doing great from the look of it in comparison to the other one. That's Bendigo Bank. That's a small one. Bendigo, $4 billion. Anyways, what happening? Okay, thank you. Okay, income statement. Yeah, let's just go to net income. Oh, yeah. Again, it's a tough year for the banks. It's not making bank. Excuse the pun. Anyways, yeah, no, it's not looking. I mean, it's okay. It's a safe bet, but there's better safe bet, and I think it's Commonwealth Bank of Australia is much better. Oakley dokley, looking at the chart. This is 1 hour chart. Let's look at the one daily. Let's have a more overview picture. See this, it's, I'm just going to zoom in. Yeah, if you, during the pandemic, during this crash here, if you had bought Commonwealth Bank, you would have doubled it by now, even more. And I think Commonwealth Bank has similar chart, but this point here, it actually goes up all the ways and even more. And we can have a look at that. Maybe you can pull it in. Actually, I'll just pull it in. CBA. No, it just turns out to be a more CBA thing. Yeah, CBA is almost back to the previous level, while WBC is not really there, and that is a little bit disappointing. If you actually bought this and then saw the Commonwealth Bank, you'd be kicking yourself. I know I would. I mean, for me, the banks that I would buy into is ANZ, which I did, and CBA, which I didn't, but I really want to now. And so yeah, because or watch that video. It's the CBA video. Yeah, look, it's okay. We'll chuck a fib on it and have a look. Earnings going down, not a good sign. Yeah, not a good sign to see net income going down like that. But like I said, this year is especially bad. However, earnings has been going down before the whole pandemic. So you kind of wonder, what's wrong with it? Is it not providing something the customers really want? And like I said, I've interacted with Commonwealth Bank before, and they have just really great, outstanding customer service. And when you put yourself in the shoe of a customer who knows nothing, who knows the bare minimum of a bank, they put the money in and hope to really get some interest and withdraw the money when they need it, right? So what that means is for them, all banks have similar. So where's the differentiating factor? The differentiating factor could be maybe interest rate. Sure, that's easily worked out. But for me, I feel like customers appreciate a good customer service, especially when the field is so complex, and banking is complex. There's so many loopholes and stuff like that. So I think what Commonwealth Bank is doing really well is being able to provide that kind of customer service, because when I go into the branch, all of them are very happy, very welcoming to the clients, and I think that's their standout factors. Beside that, the online banking platform is definitely years beyond ANZ, and I haven't used the Westpac one, but from what I've kind of like heard, is that CBA definitely has the best online banking application and website, really. Excuse me. Wow. I kind of readjust myself. Looking at the MACD, it seems like it's could be a dip, but I don't think so. You can see that it's kind of right a wave. It's just a slow um what is it? A slow way going up. It just slowly going up, just stretching that out. That could be a safe thing, but because then say, hey, maybe it's not overvalued, but I just don't think so. I just think that it was overvalued, then it's gone down, and then now investors kind of say, well, what is it really worth? Was it really worth what it was before, or it's actually supposed to be lower? And I think it's maybe that's where it is, but it's hard to tell unless you look into it in a little bit more depth. This was supposed to be oversold. All right, now let's just chuck a fib on it and call it a day. Really, it's it's okay. I wouldn't put my money in it. Oakley dokley, let's put out a fib retracement and draw that. Did I draw it the right way? Never do. Never do. It's almost like putting a USB cord into the USB port. You can never get it right the first time. Okay, so what are we looking at? We are not looking at that. All right, let's do it this way and see where we need it to be. Okay, so it seems like it gets to the halfway mark of where it used to be, which is, yeah, fine. From the look of it, it did. Maybe is there another? Let's see. Maybe we can draw a resistance. Any resistance? There, maybe one around this point. Uh-huh. And maybe there's one around this point. And there's definitely another one here. There we go. There you go. That's fine. It's rough. It's never an exact science. You kind of have to know the range. It's very hard to buy at the absolute bottom, like right there. If you bought it there, you'd be laughing. Anyway, so it seems like it's a fake out, and it's kind of come back down. I suspect that it will come back down to maybe this point and then continue upwards, but at a very slow pace. Just from the look of it, the volume isn't great. I mean, the volume just decreased since then. But yeah, it's just not good looking. Let me just go to awake and see if we can spot any significant areas. Yeah, so it's kind of like dropped down to almost that point there. Is that 2008, 2009? Yeah, it is. And where are we looking at this point? Not significant there. And then we got another point up here, but I don't think we'll worry about that for now. But yeah, it just look like it's running out of steam. That's all. But yeah, do I think it will reach this level at the $40 mark? I think it could, but I think it's going to do it much slower than the CBA. I mean, like in terms of proportional change. But yeah, look at if you want to give it a go, I would recommend finding more about it and its competitors and how if you believe that it's better than CBA or ANZ in any way, you want to find that out before you buy it. At the moment, from personal experience, I find CBA is definitely much better. Again, the only reason why jumping in ANZ is that at the time it has a better dividend yield. Little did I know that they decided not to pay dividend. It's lack of foresight on my part. But anyways, it's definitely a safe bet. Again, it's a blue chip company. ANZ, I don't think ANZ is a blue chip company according to this, which is really odd. But anyways, the point, if it is, I'll make a video out of it because I'm doing a blue chip series. But yeah, it's a safe bet. Not great dividend yield. But yeah, you know, you wouldn't lose sleep if you invest in this particular company, especially now, right? Especially now it's a drop, it's recorrected. Now it's kind of like it was a bargain. Now I probably don't Don't know if it's still a bargain. Maybe it's hitting its target price. But yeah, anyways, that's all I have for today. Thank you so much for watching this video. If you like what you see, what is it? Share, like, and subscribe. Any discussion, put in the comment, and I'll see you guys and girls next time. Take care.